The natural gas markets experienced a significant surge during Thursday's trading session as traders braced themselves for an upcoming winter storm in the northeastern United States. This price increase occurred despite a notably bearish storage report, revealing a draw of only -14 billion cubic feet. This draw was considerably smaller than the 5-year average of -97 billion and fell short of expectations, which were around -40 billion. As a result, supplies decreased to 3,476 billion cubic feet, while surpluses increased from 316 to 399 billion. European nat gas futures topped €33 per megawatt-hour, recovering from a 4-month low touched earlier in the week as the upcoming cold snap is set to deepen, fueling demand for heating. Sub-zero temperatures are expected from Paris to Berlin and will persist until mid-January. Additionally, the utilization of gas-fired power plants is likely to increase as renewable energy output is predicted to decline. Average gas output in the U.S. had fallen to 107.3 billion cubic feet per day so far in January, down from a monthly record of 108.5 in December. With colder weather coming, analysts forecast U.S. gas demand, including exports, would rise from 134.1 billion cubic feet per day this week to 135.3 next week. U.S. pipeline exports to Mexico have risen to an average of 5.4 billion cubic feet per day so far in January, up from 4.6 in December, but still well below the monthly record of 7 billion in August. Analysts expect exports to Mexico to rise in the coming months once the new Fortress Energy plant in Altamira in Mexico starts pulling in U.S. gas to turn into LNG for export. Gas flows to the 7 big U.S. LNG export plants have held near an average of 14.7 billion cubic feet per day so far in January, matching December's monthly record high. Considering the reduced output and colder weather predictions, the near-term perspective for U.S. nat gas futures appears optimistic. The market is reacting to current environmental conditions and adjustments in supply, indicating a likely upward movement in prices in the short run. The current price has surpassed the minor support level of $2.71 and is approaching the minor resistance at $2.85. This level could serve as a pivot for further upward movement. If this minor resistance is surpassed, it may lead to a test of the main resistance at $3. The absence of clear trend line support or resistance introduces the potential for increased volatility. In summary, the price's positioning relative to the moving averages and support levels indicates a cautious optimism in the market, with a keen focus on upcoming resistance levels. Thank you for watching. Please don't forget to support the channel if you enjoyed the video. See you in the next one.